click on the subscribe button and remember to press the bell icon for regular notifications from our digital blogger. Hello friends, welcome to our digital blogger. Today we're going to talk about how intraday trading works. In this detailed video, we'll talk about how exactly intraday trading works. We'll talk about how do you choose stocks while you are into it. How do you research using different trading platforms and tools? How do you work out a trading strategy? And finally, we'll talk about how in the background the overall process of intraday trading works for you. Let's get started. Starting with the basics, intraday trading is basically a process where you buy and sell the securities or any other financial product within the same trading session. You do not have the flexibility of moving to the next day. You have to make a decision within the same 6 to 7 hours where the market is open. Some people do it in minutes, few in hours, few take it the whole day. It really depends on the personal preference. It is very attractive for beginners. In fact, I'll tell you, beginner level traders think that this is something like a T20 match. You can just go in and make your wins out there. Well, it is to an extent a T20 match, but just remember that one over can make or break the deal. So make sure that you understand how you deal with it. You know the technicalities, you know how you're going. We'll talk about all the things that you actually need. And if you are going to follow those things, then probably, yes, you're going to make good money. At the same time, statistically speaking, only 4.5% of traders actually survive in intraday trading. What that implies is that if today 200 people start trading, 9 or 10 people are going to survive in that, and the rest of the people are actually going to get out of that idea of intraday trading completely. So if you want to figure yourself in that 4.5%, you have to make sure that you are doing a lot of things. Now those things include a lot of long working hours, especially when you're thinking of the initial phase. You have to do a lot of study, lot of learning, lot of understanding of how the overall actually intraday trading as a concept works. How do you pick stocks? How do you use the different trading platforms? How do you do the analysis? So different things put in place are going to be part of a whole package, and you have to be open for learning at the same time. If you do that, then at the end of the day, you're going to maximize your profit, you're going to minimize your losses. This can definitely happen. This is happening with 4.5% traders. The percentage is low, but there is a definite chance for sure. Now, these were some of the basics we wanted to highlight. Now, you have to look at some of the aspects that are super duper crucial for success in intraday trading. How it actually works, you have to start with the very good point of choosing the stocks. If you are thinking of going to a destination, for example, if you want to go to, let's say, Goa, then you already know that you're going to go to Goa, right? You have already figured that out. Now, once you're starting to put your money into intraday trading, you have to figure out which stocks you want to put your money into. This is the first and foremost step. Now, you have to start from the very basic of identifying the market sector you prefer. What are the corresponding indices that particular sector is in? And then obviously, you nail down to the points of different stocks which are part of that particular industry and sector. Then you have to preserve your capital while you are choosing stocks, reduce your risk, and obviously looking to find the stocks that are giving returns to you. For beginner level traders, the initial thumb rule is that you find the stocks that are highly liquid within that trading session, that have high turnover. You'll have to look at the volume sort of column there, and that column will tell you which particular stocks are doing high turnover today. That shows that there is a definite interest from the traders community in that particular trading session. Then at the same time, you have to figure out that there is a sense of predictability there. You are not putting in money where the stocks are unpredictable. You don't know how they're going to move up or down. That is why high correlation with the industry, with the sector is definite. It's very, very important. For example, if you're thinking of putting in your money in the banking sector, now within the banking sector, you can, let's say, choose ICICI or SBI or probably HDFC. Now these stocks have a high correlation with the industry as well. So if there is some news, some event that is happening and that is directly impacting positively or negatively the banking sector, then you can be rest assured that these particular stocks are going to be moving in the same direction like the sector is moving. So that is why there is sort of a predictability factor out there. Now if you are putting in your money in the stocks that have no correlation with the industry or the sector, then you are putting yourself into a confusing zone, because those stocks are going to be highly unpredictable in the direction they go. and at the same time you have to follow the trends. This is something that you have to go and follow at all the point in times, whichever stocks, whichever industry you're putting your money into. Now once you have chosen the stocks, you know where you are going towards to. Now the point next that comes into picture is you have to identify some of the tools that you want to need in your analysis. This is something which differentiates you from any other trader. If you talk about a random trader, they are putting their money based on what other communities have to say, what the advisors on TV have to say, what people on different YouTube channels have to say. So this is what they are doing. You have to do some of the things on your own. You have to ready yourself with different trading platforms. Obviously you have to start with some of the applications that are provided to you by your stockbroker. It could be mobile application, a terminal software, or a web application. You start from there, but within that application or using a third-party software, what you can do is you can use features like charting tools, technical indicators, heat maps, trading signals. Obviously they come from technical indicators itself. So all these things are going to help you. You have to also understand how to in fact make the best use of these tools within those trading applications, because using charts, for example, analyzing them, it's an art to an extent. You have to have an understanding. How do you understand the chart in the first place? How do you figure out different frequency levels? How you put in different drawing tools there? How do you put in technical indicators in place? How do you there's a whole sort of science within different charts there, and you have to understand that understanding these charts is important in the first place rather than doing something else. So if you're using technical indicators on top of it, this is going to make your job even easier, simply because technical indicators are going to they are going to assist you and tell you which stocks are going to be best buys at what particular point in time, at what particular price. So these are the things that technical indicators do based on the past trends they look at of that particular stock, and they also give you a direct indication that this is the right time for you to buy or sell that particular stock. You don't have to do it manually. Technical indicators are going to help you out. So now technical indicators in itself are more than 100, around 150 for that matter. So you have to see which one work for you. We have different videos, we have tutorials, articles on digitalblogger.com as well. You can check those out and figure out which particular trading platforms, which particular technical indicators, which particular charts work the best for you. So you have to ready yourself, you have to differentiate yourself while using these different trading tools. At the same time, you have to design a strategy as well. This is something even more technical in nature. Now, strategy could be very subjective, honestly. It's not an objective thing. It has to do a lot to do with the market momentum. Market trends change the market strategy. You have to be flexible and adaptable at the same time. If you are very rigid, if you're thinking that my strategy worked yesterday, it should also work today, well, that is not going to happen. So you have to be very flexible. You should be able to improvise within that strategy you have designed yourself. At the same time, you got to put in entry strategy, exit strategy. You need to have a knowledge of the escape strategy as well in case you're stuck with the trade. So you need to have these understandings. Now all of these things could be very overwhelming for a beginner level trader, but let me tell you that this cannot come within a day. It will take time, and by time you will get some sort of experience, you will get some sort of expertise. And while you are practicing these strategies, you are using those trading tools, you are understanding how to choose stocks, there's no way you cannot stop yourself to become a successful intraday trader. So these are some of the things that you are going to put in your kitty while preparing yourself to be an intraday trader. But at the same time, as an intraday trader, you need to understand the overall process, that once your mindset is ready, you know the finances, the goals and the purposes, you are using technical tools, indicators, you are putting in the research in place, you have the strategy. This is where the big showdown comes into picture. The trading preparation of an intraday trader happens a day prior to trading session. If you are going to invest your money on a Monday, then your Sunday is going to be very busy. What exactly you will be doing? You will be practicing hard within your strategy. You will be looking at the charts and indicators of what happened on Friday or probably 2 days early to that, and from there you will be taking some hints. You'll be writing some notes for the next trading session. Once the session opens, you will look at the price movements on the actual market, what the trends happening, what the bid-ask price spread for the different stocks that are opened up, what are the charts saying, and then you will align those particular movements with the strategy that you have put in place a day earlier. And once these things are mixing up, this is the time you are actually going to put your money for your trade. You will be able to use the indicators that can help you to predict the price movements like we mentioned earlier, and Obviously, once the trading session is complete, the price position gets squared off automatically. You can obviously do it manually as well, but if you do not do that, then your trading platform for an intraday order will do it automatically for you. So these were some of the aspects we wanted to highlight as far as the overall intraday process is concerned. Hopefully you are able to understand how the things go. If you still need some sort of assistance, you can check out ourdigitalblog.com/intraday trading/how intraday trading works. This is available both in English and Hindi as well. If you want us to suggest a broker that matches exactly with your broker requirements, you can check out ourdigitalblog.com/free stock broker suggestion. Put in your details and we will set up a call back for you absolutely free. So that's it for the video. Thank you so much for watching it. We hope you liked it. In case you did, please like the video, share the video with your friends, and definitely subscribe to our channel, Digital Broker. Thank you so much. Bye-bye.